Welcome, everyone. My name is Yushai Dishi, co-president with Noah Hazlitt. Liam, next slide. A quick rundown of our agenda tonight. Land acknowledgement. We want to be covering three main topics: indexes versus exchanges, ETFs and mutual funds, and then trading indicators, including moving averages, exponential moving average, RSI. Then we kind of want to quiz everybody on that knowledge with Kahoot. And then the winner is going to win a $50 Amazon gift card. So maybe take note. Sometimes Kahoots can be a little easy, and it's more of a game of speed than a game of knowledge. So we threw in some trick questions. We threw in some curveballs. Keep your wits about you. Try not to be the first. Try to get them right. And then finally, obviously, we're going to end off with the announcement of our trading competition, which starts next week, and how you can join and everything about it, and our Q&A session. Before we start, I just want to announce our trading competition, and then later at the end of the event, Marcel, our VP of Operations and Events, she'll run down how you can join on Investopedia. So every year, every semester, we like to have a trading competition. Every year, we're always adapting it and making it newer and better. It used to first originally be on Yahoo Finance, then we moved to Stock Track, and now this year it's on Investopedia. We think this service is a lot better. It's interactive live trading. It's not a passive account. Everyone's free to join. It's going to run for 5 weeks. You're going to be given $100,000 virtually, and you kind of just trade in the market and try to make money, try to lose the least amount as possible. A big driver, a new thing this year, is we're having 3 cash prizes for the winner. First place is going to win $250 Amazon gift card. Second place is going to be winning a $100 Amazon gift card. And the third place is going to be winning a $50 Amazon gift card. But it's not just about winners. We're also going to have some smaller prizes for unique portfolios, such as a sweater, an RTA sweater for whichever portfolio lost the most amount of money. So there's no losing, really. The biggest loser is also a winner. Is there a Ryerson flavor? Save all questions to the end. I'll hand it off to Marcel for our land acknowledgement.
So for the land acknowledgement, Toronto is in the Dish with One Spoon territory. The Dish with One Spoon is a treaty between the Anishinaabe, Mississaugas, and Haudenosaunee that bound them to share the territory and protect the land. Subsequent Indigenous nations and peoples, Europeans, and all newcomers have been invited into this treaty in the spirit of peace, friendship, and respect. Just a disclaimer before we begin, the analyses and conclusions of Ryerson Trading Association contained in this presentation are based on publicly available information. RTA recognizes the risk of trading securities and does not advocate the purchase or sell of any security, nor does RTA take responsibility for any transaction that may have occurred due to our presentations. This presentation and the information contained herein is not a recommendation or a solicitation to buy or sell any securities.
Okay, so hi everybody, my name is Liam. I'm President of Finance at Ryerson Trading Association. And we're just gonna kick things off with talking about what the difference between stock indexes and exchanges are. So this is, maybe a new topic to some and maybe not to some others, but it's pretty important thing to talk about since it can be easily confused and they're very integral to trading in general. So, the first thing we're gonna do is we're gonna go over what a stock exchange is. For those of you that are not familiar, the easiest way to understand what a stock exchange is it's where people meet or two entities meet to exchange stocks for cash. Now, back in the day, this used to happen in person. I'm talking way back in the day, before the Great Depression, people would literally go down there with paper shares for how many shares you had, and they would physically trade them. They yell out. That's why you always see in the movies, people are yelling out with papers in their hands. I'll take it for 20, 20, 25, 25. And then a little bit later on, there was this thing called brokerages that came up, where you could just call in and have somebody go sell them on your behalf. Nowadays, that doesn't happen. people just do it online for the vast majority of all transactions. And so this is, kind of the birth of the online brokerage, which a lot of you might be using Questrade or Wealthsimple. That's exactly what their service is. So, the stock exchange, that's where people go to trade stocks for cash. It's also where a company can go to be listed so that it can be traded publicly. And some of the biggest stock exchanges that you'll hear of, especially in North America, are the NYSE, the Nasdaq, and the TSX. So let's just talk about the New York Stock Exchange for a second. It is the largest stock exchange in the world. It's obviously located in New York. It's right outside this this bull statue here. It's on Wall Street. When you hear a lot of people talking about, well, this is what they're doing on Wall Street, this is basically what they're talking about for the most part. It's a large part of the finance market in New York. It has about $26 trillion in market cap, and that has about 2,800 companies listed on it. So, if you don't know what market cap is, it basically means that's the value of a company, and so the total value of a company. And so, the market cap for the New York Stock Exchange would be, the sum of all the total values of all the companies listed. So it's quite a bit. 26 trillion is quite a bit over the US GDP per year. So, we're talking about huge numbers here. The Nasdaq is also in New York. So this is a very important exchange as well, because it was the world's first electronic exchange. And now it has about 3,300 different companies on it. For the most part, this was for tech shares in general, especially when it started out. But it's kind of moved on from that. So now it houses just a lot of growth stocks, whereas the New York Stock Exchange would have more value stocks. That's not very, those are very loose in terms of how strict they are, but that is generally how people refer to them. We can talk about the TSX next. So this is the largest stock exchange in Canada, and it's the third largest in North America. So there's actually not that many stock exchanges in Canada in general. There's the TSX, TSX Venture, and the CNSE, the Canadian National Stock Exchange. You can kind of consider this the NYSE of the North. It's kind of where everything goes down. And actually, we're not that far from it. Ryerson's only about 2 or 3 blocks away. It's on Bay Street. So yeah, I don't know if it's open right now, but I think you can kind of just pop in and not see what's going on, but you can definitely get more information if you're ever down there in person. So then let's kind of pivot to what a stock index is, because it's very confusing. People get confused a lot between what a stock exchange is and a stock index when they start out trading. So an index is basically just a group of stocks that people put together, and you take the weighted average of it. So what that means is, it allows people to see what the general stock market is doing. So instead of just, it's hard to determine how the stock market's moving if you're only looking at Apple and Walmart and Amazon. So companies put together these huge indexes to help people decide which way the market's going to go. So the most notable ones, the ones that you're probably going to see most often if you're using something like Yahoo Finance or even Business Insider or something like that, for sure is the S&P 500. Also the Dow Jones Industrial Average. Sometimes you'll see that as Dow 30. Most of the time you'll see that as Dow 30 actually. The TSX 60, the Nasdaq Composite, the FTSE 100, the CAC 40, and the Nikkei 225. And let's just talk about this briefly. So the S&P 500 is definitely the most widely used stock index, especially for, well, I would say probably worldwide, but since most of business exchanges happen in the US, but it's definitely the most widely used in all the US. And as the name implies, there's 500 companies in there. Some of them include, most of the big names that you'd hear of, including Apple and Microsoft, but also some companies that you don't know about, maybe Exxon, which is not a great example for a company that you don't know about, since that's a pretty popular one, but I just wanted to give a little bit of variety there. The Dow Jones Industrial Average is also known, as I said, as the Dow 30. Instead of 500 stocks, it's only 30 stocks from about 9 different sectors. And it's, people use it. They generally, the S&P 500 and Dow Jones generally move in the same direction and generally in the same magnitude. But, well, for one reason, because almost all the stocks on the Dow 30 are also included in the S&P 500. That's first off. They're also both US based, but the difference between the Dow Jones and the S&P 500, besides the large difference in number of companies that they hold, is that the Dow Jones is typically for blue chip companies that are a little less cyclical. And so this is kind of to show, I would say, it's a guide for how the overall economy and the US is doing. Kind of the more industrial side of things, industrial maybe is not the greatest word to use, but kind of the foundational companies like Walmart, that generally do well no matter what the economic circumstances are, but will be heavily influenced by the economic circumstances. And then, the final one for the US would be the Nasdaq Composite. So best way to understand this is that it basically is an index for the Nasdaq exchange. Now, one of the reasons we wanted to go over this is because people get very confused sometimes between the Nasdaq and the Nasdaq Composite. So the Nasdaq is the exchange, the Nasdaq Composite is like the S&P 500 for the Nasdaq. Maybe a bad way to explain it, but maybe it's not so bad of a way. We'll talk about the TSX 60. So this is also by S&P, which is a company called Standards & Poor's, if you're not familiar with it. It's basically the main guide for Canadian stocks. And it covers about 95% of the Canadian equity market. You can basically think this as the S&P 500 of Canada, since it has about 250 companies. And yeah, we'll talk about a couple of these international markets as well. Basically, you don't need to know that much about it because it's not that easily to trade on these exchanges from Canada, or especially in our circumstances. But we'll just touch on it only because you'll see these pop up, and you might think, okay, like what's the deal about this? What is it all about? So the 5100, that's the London Stock Market Index. That's basically all you need to know about. The CAC 40 is Europe, is for a broad part of Europe, but it is in France. And you can see, a couple of the companies that you might recognize are below there on the slide. And the Nikkei 225 is Japan's index, has about 225 stocks, as the name implies. And it has a lot of big stocks that you would think might be actually listed in the US, but are listed in Japan. I would say this is probably the most relatable stock market in Asia, easiest for us to understand because it works largely the same way. So now that we've talked about that, let's go on to kind of our poll question here, which Marcel is going to throw off for us. So the Nasdaq Composite is a stock exchange, true or false? We only give it a couple more minutes here, a minute, maybe 30 seconds left. I finish it in about 15 seconds here, so get your answers in. Oh. Looks like everybody's in. So people are kind of split. For the most part, you guys got it right. The Nasdaq Composite is not a stock exchange, it's an index. So that was one of the things I talked about. It's easy to be confused. Can everybody see these results, by the way? Yeah, somebody give me a thumbs up. It's easy to be confused between the Nasdaq and the Nasdaq Composite just because of the same name, but just remember that Nasdaq Composite is the index for the exchange. And I'll pass it off to Rhiannon, who's going to talk about ETFs and mutual funds.
Hi guys, my name is Rhiannon. I'm an analyst in the Ryerson Trading Association, and I'm just going to jump right to it for ETFs and mutual funds. So next slide. So an ETF is also known as an exchange traded fund. It's a type of security that tracks an index, sector, commodity, or other asset and can be purchased the same way as a regular stock can. These hold a basket of stocks that can be the same industry or various industries, and it's a great way to instantly diversify your portfolio to minimize risk when investing, and it's also not as time intensive as other trading strategies. the way that ETFs work is that, as mentioned before, it can be traded and traded on an exchange just like a stock. So you can purchase them through online brokers, traditional broker deals, and the price will also vary throughout the trading day as the shares are being bought and sold on the market. And the market is also open from 9:30 to 4 p.m. Eastern time on the weekdays. So that's generally your time period to purchase these ETFs. Next slide. We're going to go and mainly focus on the differences between a passive and active ETF. So for an active ETF, portfolio managers will hand select the buying and selling of shares within the fund, and they'll make these decisions by looking at stock valuations, industry trends, and views on macroeconomics, and they'll typically have a higher fee than a passive ETF, just mainly because it's a really time-consuming process just to look at so many different indicators. And for a passive ETF, they're going to be typically modeled after indexes, and they're not going to be as actively managed. So they're going to have a lower fee than an active ETF. I have an example down below for an example of an active ETF, such as ARK, and the general fee for this is going to be 3% in comparison to a passive ETF like QQQ, which is only going to be 0.15%. Next slide. Here I created a map of 4 simple steps to invest in an ETF. The first thing you're going to want to do is find an investing platform. So ETFs are available on most online investing platforms, and depending on the platform you choose, the purchase of an ETF can be commission-free. Usually platforms that do charge a commission fee will have educational content to help new investors become more familiar with different concepts and have research and different articles to help new investors, while investing platforms that are generally have lower fees or commission-free don't have as much information provided for you. And so once you do decide on investing platform, depending on your value of choice, you're going to want to open up a brokerage account. And opening up a brokerage account isn't too time consuming. There are a couple information that is required, however, and this could include your name, SIN number, government issued identification, or your date of birth and other things. And once this is fully complete, you can go ahead and start researching ETFs if you do decide on investing in an ETF. So you want to decide on investing in ETF, or if you do decide on investing in it, there's going to be a wide variety that are available in the market. And you're going to generally want to look at the bigger picture compared to looking at each individual security separately. So when this happens, I generally like to ask myself how long I plan investing in ETF, whether or not it'll be a long-term or short-term goal of mine, and also what particular financial instruments excite me the most. So this is important because I think I mentioned this on the first slide, that some ETFs focus on a specific industry. If you're interested in a specific industry, you may decide to invest in a lot of stocks that are in a specific industry. And so you may want to choose to invest in an industry-focused ETF, and I'll go into this in a little more detail in the next slide. But after you've done all your research and you kind of figured out what your kind of goals are in terms of investing for ETFs, you can go ahead and consider a trading strategy. They'll help you achieve the kind of goal that you want. So next slide. I'm going to briefly touch upon this because the main priority of the main priority is just looking at ETFs. So mutual funds are professionally managed investment funds that pools money together for many investors to purchase securities. And next slide. So here are a couple examples of common ETFs. So I know we briefly touched upon QQQ and ARK, but I also really wanted to talk about ETFs that focus on specific industries and why this also might be useful. So this is a trading technique that's called a sector trading. And a lot of investors will spend most of their time researching and reading articles to learn a bit more about the economy. And they might find specific industry that hold promise, but there's so many different types of companies involved that it's really hard to choose the right share to own. And an alternative solution to this could be having a little bit of ownership for everything in a form of industry-focused ETFs. So an example of this could be used with the legalization of marijuana in 2018. A lot of investors knew that the stock would rise with the recent news of marijuana becoming legalized, but there are so many marijuana-focused stocks to buy, it really becomes hard for you to pick and choose. So some decided to invest in ETF that holds a basket of stocks in the marijuana industry. And an example of this could be Amplify Seymour Cannabis, or CNBS. We can go into a little bit more detail about what ARK is as well. So ARK, I think if anyone remembers, ARK is a active ETF. And this really looks and seeks at the long-term growth by investing in different securities that are known as disruptive and innovative. So the kinds of securities that are involved in an ARK ETF could be something related to artificial intelligence or genomic revolution. And this may be beneficial to you because, like mentioned before, for active ETFs, they're able to respond to current events to kind of reduce the risk associated with the market in comparison to the QQQ, which just follows the index when it goes up and down. And they don't really do much to kind of mitigate the risk. But that's also, again, why the management fees are really kept low compared to active ETFs. And next slide. So I prepared a poll question for you guys just to make sure that you guys are paying attention. So what does an ETF stand for? Just gonna wait a bit. Oh, looks like everyone was paying attention, so that's really good. So the answer was exchange traded funds. Slide.
Now, for our third topic, we will be covering some basic trading indicators. Next slide, please. First of all, have any of you seen this type of image? Now, if it's your first time, as most likely, you're probably thinking, like I did, what the hell is this? What the bloody hell is going on? This is what I asked myself when I was first introduced to these such charts. Even if you have seen multiple charts like this, there's still a lot going on, and it's still very difficult to comprehend everything at a single glance. This is where we get into trading indicators. To start, why do we use them? Next slide. Our human brains are generally poor at understanding very large informations of data at once like this. However, the one thing that we are very good at is pattern recognition. The primary purpose of such trading indicators is to develop and identify patterns to take advantage of. You'll see this in the examples I shall be providing for the three indicators that we shall be covering, which are moving average, exponential moving average, and relative strength index. Next slide. These are the three. Next slide, please. First, we have moving average. The moving average is simply average stock, the price of an average stock over a period of time. In many ways, think of it just as a simple line of best fit for securities. Moving average is very useful in removing the buzzing noise of the small ups and downs to get a better picture of the overall trend. These trends become the primary element of this indicator. Average highs and lows over a period of time will create a line of resistance / support of a stock's pricing. Think of these as a floor and ceiling respectively. When a stock sees an increase, it tends to see a consecutive decrease in price. Think of it as if one were to be jumping up and down. So, say for instance, if a stock is able to breach its ceiling, then that ceiling becomes its new floor. Whereas if a stock is unable to breach a ceiling and manages to crash below its floor, that said floor becomes its new ceiling. One could take advantage of such trends by identifying a stock's momentum with moving average. For instance, a stock's price is currently much higher than its moving average at an overall total trajectory which is positive. This will send bullish signals, with either being a good time to hop on and take advantage of the ride, or to look and sell to take advantage of whatever gains you have made currently. In a more contradictory case, say for instance, of a sudden decrease in price from previously overall positive trajectory. This will indicate a profound a bearish change in momentum, requiring traders like you to react accordingly. Now, next slide, please. On to exponential moving average. EMA is moving average with a simple twist. It is heavily weighted on the most recent price changes. This solves the main issue of lagginess with moving average, with EMA being much able to better quickly respond to the recent price changes, which is the main problem of moving average. However, this could end up with a boy who cried wolf scenario, with EMA being very overreactive to changes. Next slide, please. There's not much to cover with EMA. Now, with the relative strength index, this one's all about momentum. The RSI indicates when a stock is being oversold or overbought. In most cases, when people are buying a stock rather than selling it, it rises in price, and vice versa when more selling. The RSI indicates when there are extreme levels of this. This formula is essentially a mathematical equation that will determine the purchase index or the purchase momentum of a said stock. Overbought stocks with an RSI greater than 70 tend to rise quickly, then fall back down after a short decrease of time. Overall, oversold stocks with an RSI lower than 30 tends to see a sharp decrease in price from a sell-off, but a quick recovery as a correction occurs. RSI is helpful for when you are putting a very counter-cyclical trading in practice to better take advantage of a market's momentum whilst avoiding being the sucker holding the bag. And that is all for trading indicators. Thank you. Now, for our poll question, what is the RSI indicator? What are the intervals of RSI indicator? We shall wait a few more seconds. I think we're good. That is right. 70 to 30 is the primary RSI indicators. Congratulations to the most of you. Now, we will be announcing the Kahoot winner later on, and to the lucky person, they shall be winning a $50 Amazon gift card.
So for the exciting part, we're going to start the Kahoot. So I hope you guys are paying attention. So just pull out your phones, or you can do this on your computer. I just need 1 second to launch the Kahoot for you.
Also, keep in mind, guys, in order to receive the prize, the name that you put down in the Kahoot has to match your actual name in the Zoom.
Yeah, so no outlandish usernames or you're not eligible for the prize. So I hope you can see the Kahoot screen now. Is anyone unable to
Yeah,
get it?
so yeah, it says there's a limit on how many people that can enter in the Kahoot.
Okay, give me 1 second. In the meantime, someone can just, I don't know, start a finance chat. So tell
In the
them
meantime, we can answer some of the questions that people had in the chat. So we'll pull up some of those questions we had. What is the difference between an ETF and an index? Liam, do you want to take that?
Yeah, so they're completely different things, really. Although some people do use ETFs to, kind of navigate the market and see how the market's reacting to different news things and stuff like that. So an ETF is an exchange traded fund. You can actually buy an ETF, and it's something you invest in. And an index is kind of it's a different type of stocks that just is supposed to act as a barometer for how the overall market's doing. I think why maybe the question came up is because there are passive ETFs that just track an index. So like Rianne was saying, there's
XQQ.
SPDR is a great one. It tracks the S&P 500. It basically has the exact same makeup as the S&P 500. So yeah, I mean, that's the best way I can say it, really.
Yeah, and then you have more narrowed ETFs like Psych, which is a psilocybin mushroom ETF that tracks 17 of the top Canadian psilocybin companies. And again, the idea behind this, as Randy mentioned before, is that you don't know who's going to win in this sector, in this new industry. And you could gamble and say, I think MindMed is going to be the winner, but what if someone else does? So you have these ETFs that track the whole industry. It's much safer. Another question we had, are you guys hiring for any positions? Yeah, we hire on a rolling basis. Generally always for analysts. We're always hiring analysts, produce monthly to weekly trading reports. They present at our events. They're very involved in the club. And we're also hiring for a number of different positions as well on a rolling basis. If you are interested in joining RTA and being part of this club and making contribution, you're always welcome to reach out to our Instagram page. And there should be an application on there. And if not, you can just DM us and we'll walk you through it. What are our thoughts on the Bitcoin ETF? Great question. So the Bitcoin ETF is a Bitcoin futures ETF. So it's unique because it's not actually tracking Bitcoin. It's tracking the future value, the speculative future value of Bitcoin. Which futures markets are a bit different than like the current markets. My personal stance on it is more financial institutions are recognizing cryptocurrencies and they're including them in all walks of life. I think this is going to be a continuous trend. And we'll just see cryptocurrency in many different forms be part of everyday financial life and normal life.
Isha, I think, I don't know if we skipped it or I wasn't paying attention, but Fadi also asked about the difference between what's the difference between mutual funds as well in regards to the ETF and the index?
Yes. Rainey, do you want to cover that or Liam?
Sure. So I do understand the confusion a little with both mutual funds and ETFs, mainly because they're both pools of investments managed by professional fund managers. But for mutual funds, for the majority of the time, they're going to be more actively managed by management portfolios. So the fee is going to be a lot larger. And these mutual funds are only going to be bought and sold once daily after the market closes, which is after 4 p.m. in comparison to an ETF, which is where you can essentially buy them on the daily when the stock market is open. So you can, if something happens, you can just buy and sell them really quickly. The reason why mutual funds you can buy a mutual fund after it closes is because you're trusting the portfolio managers to really work and do all the work for you. And I do believe there are some tax differences between the two. I'm not quite sure there is, if anyone could remind me.
Yeah, there's a couple tax differences. They're not that important, but since you brought it up, I mean,
Okay.
ETFs are only, well, I don't actually want to get too technical into it. It basically has to do with how they decide to make a distribution. ETFs almost always distribute capital gains, which is the most favorable tax incidence. And mutual funds have different requirements depending on what type of fund they are. So they might distribute income, they might distribute dividends. It's getting very technical at this point, but for the most part, for our purposes, they're more or less pretty similar. And I don't know if we're going to actually be able to get the Kahoot going.
There's a slight technical difficulty on the Kahoot, but while that's being figured out, we might just continue explaining how you can join our trading competition.
Okay, let me throw that back up. You guys can see that?
Yeah.
Yes.
Okay, so while that's being figured out, let's talk about the fun part. Okay, so the trading competition. You heard Yeshai talking about it earlier, but now I'm going to tell you how to actually sign up and participate. So just to recap, our Investopedia stock simulation competition will be starting on November 1st. It's an amazing opportunity for you to make some trades and have some fun doing so, since it's not your real money that you're using. So it all starts with a simple Google search. So just search Investopedia stock simulator in your preferred browser and select the link that resembles the one you see here. I'll also provide the link in the chat for you guys. 1 second.
Sal, are you sending that in, people sign up today if they wanted to?
Yes, so you can sign up and you can join the game, but you can't start making any trades until November 1st, until the game opens. So you can sign up right now. So once you click that link, you will be taken to a platform that we will be using, which is Investopedia. So you're just going to press start trading. Next slide. Now you're going to sign up using your Ryerson email. This is very important. Please use your Ryerson email so we can verify who you are. If you win any prizes, and if you don't use your Ryerson email, we can't verify who you are and we can't give you any prizes. So no one wants that. So use your Ryerson email. So once you sign up using your email, make a username and password, you'll be sent a verification code to your email. So just follow those instructions and sign in. Next slide. Once you log in, you will be brought to a page similar to this one. So just navigate to the games section and join game. There will be a search bar for you to search games. As you can see, there's a list of public games that people around the world have made. But to join our special amazing game, you're just going to search RTA Stock Competition 2021. You're going to press join, and then you're going to press confirm join. Next slide. So congratulations, now you've successfully joined the game. So take some time to explore and get familiar with the platform. This is the main screen you will see. It is your portfolio where you can see some of your stats and trades. And as time goes on, you make your trades, you can see a graph of your performance and account value and such. Next slide. So the last part I will talk to you about is the trades tab, which is the place you'll come to in order to actually make your trades. So you'll look up the symbol and specify what action you want to do and the quantity of your buying or selling. I encourage you to explore and experiment because, of course, this isn't your real money. So this is a chance to test out different approaches and ideas you have without actually being at a loss. Next slide. For the much anticipated prizes, like Yishai talked about, the first place prize for the simulation is a $250 Amazon gift card. Second place is a $100 Amazon gift card. And third place is a $50 gift card. And no, that is not all. There will be more prizes which are to be announced, so stay tuned for the updates. Next slide. So back to our Q&A session.
Marcel, could you tell us what the name of the game is again?
Yes, I will write it in the chat too. It's RTA Stock Competition 2021. It's on the slide right there.
Perfect. Fadi had the question, should we transfer funds to the account to play the game? That's not how this game works. None of it's real money. You don't transfer anything into this account. It's all virtual funds. Once you join the game, everyone's given a virtual $100,000. And you have that to make any trades you want in the stock market. You can sell them at any point you want. You can do swing trades, long-term trades. The only restrictions we put in is the minimum value of the company has to be, of the stock price has to be $1. Essentially, we're trying to eliminate penny trading because it's a little bit skewed when you have penny traders in the game. Can you trade Forex? I don't believe you can, but you have to check out on the platform if you can. I've used Investopedia for a while now. I've never attempted to trade Forex, so I cannot answer that question.
And yes, you should use you actually have to use your Ryerson email. If you don't, because you maybe don't have one, depending on your student situation, there's a chance we might send you an email and say, who are you? Do you actually go to Ryerson? So just avoid all that in general. And again, like you won't be able to win any prizes. It says the top player is Heen Lam 2005. Are you sure you have the right competition? Karsten?
Yeah, you may have just joined one of the many free games. Again, you have to search up RTA Stock Competition 2021, and it is the only one named that. It'll come up.
Reposted it. Is there anybody, so while they're trying to sort out the Kahoot situation here, we can jump into Q&A here. Yishai and I don't see any more in the chat, so feel free to either put your questions in the chat or you can unmic here. Is there a Ryerson crypto group? I have absolutely no idea.
No idea.
I don't think so.
We talk about crypto sometimes here, but we are not a crypto trading group. Yes,
If there isn't, and you want to make one, go ahead. I'm sure you'll find a lot of support. Crypto has been very big with especially younger traders.
Shib was up today. Anyone listens to Shabino. You cannot trade crypto because crypto is not a security on any stock exchange. You could trade the BCH ETF, which is a futures of Bitcoin, but that's the only security I believe you could probably trade of crypto.
That might answer the question about foreign exchange then, actually.
Also Coinbase. Yeah, you could trade Coinbase and Robinhood.
It's RTA Stock Competition 2021. I posted it up there. If you scroll up, I'll send it again. 2021. The next event is going to be on November 16th, I believe. Somebody, if that's wrong, please let me know. But it is going to be our Trading 301 section. And I'm going to send you the link to our website where you can find out a ton more information. You should also sign up to be a member on our website. It's free. And it's where we put all of our information. If you want to stay up to date with what we're doing, make sure you follow us on social media and stuff like that. But the website's a great way.
If you want, you can check out our Instagram handle, Ryerson Trading. Every week, we post multiple charting wizard Tuesday tips, weekly tips, all about stock trading. It's a great account, and you get up to date, keep up to date with everything we post, so you know what's happening. The game isn't found. Chris, if you just type in RTA stock, it comes up.
I believe it ends on December 6th. Yeah, Lavina. Is the simulator live? So trading large cap stocks will have little change over real time. The first part is yes, it is live.
It is live. There's a 1 minute delay.
There's a 1 minute delay. Yeah, that's right. Trading large cap stocks will have little change over real time. You might have to be a little more specific.
Are you implying, like, if you bought Apple, then you're not going to have a big gain in 5 weeks? You could argue that. I don't know. Tesla in the past month did pretty well. Again,
yeah.
You could. It depends how you want to trade. If you want to be a more conservative investor and invest in large caps and see a smaller return over a 5-month period, but that's more stable, then take that trading strategy. I'm sure some people will invest in very risky stocks and try to have large returns, and that might win. That might also make you lose, because you might lose, and those stocks are volatile.
I mean, look at a company like Ford, right? I think they did like 9% today, or 8.5% or 9% today. And over the last month, they've done, I'm not going to embarrass myself, I'm just going to look it up, but they've done really well over the last thing. Who would have seen that coming, right?
Who? Tesla?
Ford.
Oh, Ford? Yeah, Ford did fantastic this month. So you might argue, Ray, that, if I invest in large caps, I might not have large gains over a 5-week period. But not necessarily. You have fantastic gains. It's all about how you're trading.
Yeah. Swing
trades, this, that, where you're putting your money into.
And if you don't do very well and you think it's very hard, you're doing it right. It's exactly what it's about. Trading is not easy by any means. And we are not just going to sit here and say we have the answers to how you can make trades that are going to make you a lot of money. But what we can do here at this club and through our events is try to teach you more about kind of financial literacy and help you to be more financially independent with your investments. And, when we were planning this event out, we were talking about, really wanted to talk about the ETFs well, and Ryan did a great job on that. And it's because, you can walk into your bank when you're our age kind of thing, if you're in university, and probably the branch is going to say, well, you have a little bit of money now, you should probably invest in some of our mutual funds. Without saying too much, let's say you do a lot of research into that fund, they're typically not the best. They're going to charge you a lot of, they're going to charge you a very high management fee, and the returns are not going to be that great, to be honest with you. So, if you could do something on your own, like buying an ETF, that, can really help your money go farther. Lavina said,
The competition is not less than an hour. The competition is for 5 weeks. And you can make swing trades in that time.
Lavina,
Also,
yeah.
we also, some interesting things about the competition, we put in a diversification rule. We didn't want everyone to just put 100% into one stock and then have like some ridiculous turnaround. So it's a 70% diversification rule. 70% of your portfolio cannot be more than 70% cannot be into one stock. So you put 65 or 68 all into one, but that last 30 or so has to be into something else. All the details on what's permitted and not permitted in the trading competition will be in the game rules. Once you join the game, you see all the rules, it'll tell you. But in general, it's like a normal trading account.
Yeah. Lavina asked if the Kahoot is over. No, the Kahoot's not over. Please bear with us for a couple more minutes. I don't know really know what's trying to figure it out kind of behind the scenes here.
The Kahoot will come in like 5 minutes.
Yeah. For some reason.
Sorry, there was like a technical difficulty with the Kahoot. And it had a trading player limit for some reason. And now we have to make a new one. Sorry. The simulation does not permit pre and aftermarket trading. Got to trade in these 9 hours of the day.
It might allow you to put an order in, but they're not going to allow you to trade.
Yeah, the order will go in when market opens.
It won't settle. Well, it won't execute or settle for sure. Probably not, Noah.
This entire session is being recorded, and this will go up onto our website after the event or a few hours later. So if you'd like at any time, though, you can come back onto our website, RyersonTrading.com. You might have to make a free account with us, and you'll be able to rewatch this entire session, go back to the details of what we missed, how to join the competition, what's it all about. Just initial feedback. Would students be interested in winning apparel for RTA? Oh, yes, there are previous videos available. Everything's on our website. Everything's on our website, like everything we ever make.
You like the merch, eh?
Everybody likes the merch. Okay, great. All right, in that case, we'll put out merch.
And it depends.
As long as all our value. I mean, we would not be selling this merchandise, Daniel. We would be ordering this merchandise, buying it with our funds, and then giving that out as gifts, as share our content, and you win a sweater, or for our trading competition, those who lose the most amount of money, the worst portfolio, you'll win a sweater. Most diversified portfolio, perhaps, you'll win a sweater. Those with the least risky, least volatile portfolio, aka portfolio with the lowest beta, sweater. Kind of just fun niche little things that we can throw out there.
It's not guaranteed, by the way. We're just trying to figure it out and gauge what you guys would like to win. But it's good to know.
Yeah. Always trying to improve.
Yeah.
Essentially.
If you had the worst performing portfolio, maybe we send you like, I don't know, maybe like a Gucci belt or like new Balenciaga shoes or something like that. Just something casual.
There will not be a Zoom event before November 1st.
So I have another Kahoot. Let's cross our fingers and hope this one works.
Should I take my screen down?
Yes, please.
Can you share the music this time, Marcel? We really like the music.
Oh, you can't hear the music?
The Kahoot music is everything. Oh, it's Halloween themed.
Oh gosh, 1 second. Let me share the music.
We'll do a very brief Q&A after the Kahoot as well, and then we'll say farewell.
Here.
Can you guys hear it? I can't hear it on my end. You can't hear the music?
Carry it, music.
Oh,
Is that little speaker on the top, like top-ish, right above the start button? What does that look like? There you go.
Yes. Yes. All right. Great.
so can you hear it now?
Yeah, we can hear it. All right. Everyone's run up.
You like 3 more minutes to join. I think you go to kahoot.it to join.
Mm-hmm. Is anyone else trying to join? Should we wait for anyone or should we get started?
Give it like 30 more seconds. And then we'll just start away. Okay, we're still getting started off.
Okay, everyone in. What is the main difference between an active and passive ETF? Five seconds left. Seems like the majority got it right. So the answer is active ETFs have higher fees than passive ETFs. Next question, what is an example of an ETF? 10 seconds for this one. 5 seconds left. Get in your answers. So the answer is, majority got it right, SPDR. Daniel is in the lead. Next question, why do we use market indicators? 10 seconds for this one. 5, 4, 3, 2, 1. The answer is all of the above. So we use market indicators because we are naturally good at pattern recognition. It helps us visualize market movements, and we can't really reliably process huge amounts of data. Daniel is still in the lead. Question 4,
Robbie,
the purpose
right behind.
The purpose of the RSI indicator is to identify when hopefully everyone got this one right. Oh, okay, well, majority got it right. So the answer is identify when stocks are either oversold or undersold. Who's in the lead? Ravi has a streak. Question 5, roughly how many companies are included in the S&P TSX index? Three, 2, 1. The answer is 250. Safe rises to the lead. Question 6, which of the following is not a North American stock exchange? Three, 2, 1. The S&P 500. Safe is still in the lead.
It's coming down to the wire.
Which of the following companies are not included in the S&P 500? The other three we mentioned. So which one doesn't sound familiar to you? Okay, majority got it right, which is Airbus.
Listed in France.
Listed in France. Safe is still in the lead. True or false? I have to use my Ryerson. I have to use my Ryerson email when signing up for the stock competition. True. Please use your Ryerson email when you sign up for the stock competition on Investopedia.
Who got that wrong is kicked out forever.
Who got that
It would
wrong?
suck.
Fess up.
It would suck to win that competition and forfeit $250.
Yeah, it would.
The results: in third place is Ravi. Second place, Fernando Cruz. First place, drumroll, Safe Aziz. Won $50 Amazon gift card.
Congratulations, Saif. Fantastic job. I'm going to private message you currently in the Zoom and just message me your email and I will follow up and send you that gift card.
Do we have any remaining questions before we close off for the night? You can either send in the chat, you can unmute yourself. Maybe 10 seconds in case people are slow typers. Okay, I think we're pretty good here. So we want to say thanks for coming to our Trading 201 event. It means a lot that you guys came out. I hope you learned something. Our next event, as I mentioned before, is going to be on November 16th. It's going to be Trading 301. We're going to build off some of the things that we learned off in the last two, this event and the last one, and hopefully something new. We'll put our contact details up next. Again, please, the best spot for up-to-date information is our social medias, including our website. If you have any inquiries, you can send us an email or a DM on Instagram. We're pretty good at responding. If you have any questions about trading in general, you can go ahead and send us an email as well. And I can try to connect you to an analyst or something like that. Beyond that, thanks for coming out again.
Thank you everyone so much for coming. Lavina, to quickly answer questions. Occasionally our events last for about an hour. It's a little bit after an hour, hour and a half. It depends on our event. Sometimes they're longer if we have long Q&A sessions. Thank you everyone for coming. Have a great night and we look forward to seeing you all participate in our trading competition and good luck to the winner. If you have any questions, you can always reach out. We also have a WhatsApp group. I'll share the link below. And in it, we send in updates and people often have questions. If you'd like to join, that's our WhatsApp group below for your join. Other than that, everyone take care and have a fantastic night.